All right. Hello, all you wonderful people. Joshua Phillips here, Churchill Mortgage, with another market update. Today is Friday, August 23rd, and I hope you're having a great end of your summer here. So let's get right to the news. And let me switch over here to this. I like to start with our CNBC article. So today was kind of a big day. The Fed has been away at this a retreat of some sort that they do, and Fed Powell came out with the news. Hey, the time has come. We knew it was coming, but the time has come officially. They're going to adjust their policy and start cutting the Fed fund rate. So again, not really new news. We've been expecting this. The market, as I've said several times, has already baked in at least one or two Fed cuts. So that is already showing up in mortgage rates today. But, I think the bigger talk right now is, are they going to cut 0.25% or 50 basis points on September the 18th? But I think really the market's already baked in a 50 basis point cut, whether it's in one meeting or two meetings. We know the Fed cuts are coming, and that should, of course, help mortgage rates and has already helped mortgage rates. So let's go to our mortgage-backed security charts. So as I always like to say, these are mortgage-backed security charts using Japanese candlesticks. All you really need to know is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And as you can see here, we kind of lagged the last couple of weeks, just kind of been a just nothing burger the last 3 weeks. But today we kind of pulled back up with the news. We're up 29 basis points, and that's putting us right back at the top of the pricings that we've seen back at the beginning of this month. So if y'all can hear me for a second, I love to pull up these longer charts. We can look at a 1 year chart. It takes a second here, but let's see if we can get a 1 year chart. You can clearly see, we hit that rock bottom and the highest interest rates in a long time back in October, and we've kind of moved up, and then we've kind of just hung out here at a little better range. If you pull back to I'm going to go all the way to a maximum chart. If you haven't seen this chart before, it's kind of crazy. This is like a 5-year chart maybe, which mortgage-backed securities. Come on now, help me out here. It's not moving. Max, come on, give me the max. Anyway, it's a pretty crazy chart. So again, I think we continue to be above. Oh, here we go. Right here, it's finally giving it to us. Back to 2019. It's like a 5-year chart. Boy, it just doesn't want to cooperate with me. Hang on, folks. If you're watching, I appreciate it. A little technical difficulties here, just trying to get that chart. Yeah, look at that crazy chart. This is where when rates were at 3%, this is, like these super high levels, and then we just fell off the cliff for a couple of years, and now we're slowly trying to climb our way back, and it gives you a little bit of perspective on really, how far we've probably fallen and how far we still potentially would have to go to ever see rates get, really good again, something we don't necessarily anticipate. So, again, we continue to say that we should see mortgage rates slowly come down this year. We continue to be above all the moving averages. You see that red line, that's the 25-day moving average. We continue to be above that, and that is where we want to stay. We want to stay above these moving averages, and that means that our trend line is still intact for improving mortgage rates. Now, it's not going to necessarily be a straight line. We're going to have some sort of economic news or something happen in the world. We also got the election coming up in November. To me, that's a big just question mark. I don't know who's going to be elected, obviously, and I don't know which side would be good for mortgage rates, which side would be less good for mortgage rates. So that's just something we'll just have to wait and see what happens. In fact, if you could get a rate locked before the election, that'd probably be a good thing. I think if you're looking at refinancing, October would probably be a great time to look at refinancing to get that locked in before the election, before that uncertainty that surrounds that. So anyway, hey, feel free to reach out to me anytime if you want to talk about specific rates for you and your situation. I'm always including a link in the email I send out for an application. If you need to work on getting pre-approved, I'm happy to help, and typically can respond over the weekend. So feel free to email me, text me, or give me a call. Take care. Bye-bye.